Good morning once again. My name is June. I will just give you a short lineup of what we have planned for today. I'm joining you from CAPSA. I'll be your host for this session. We are discussing this morning unpacking tax, Etims, tax heads, and KRA notices. As I said, in partnership with RSM East Africa and BDO East Africa as well. Our speakers for the day will be Mr. Stephen Okoth, who's a tax director at BDO, and Mr. Josephat Karanja, who's the tax consulting senior manager at RSM East Africa. As you can see on your screen, this is how or what we are hoping to cover today. What is the practical application of Etims and current KRA compliance expectations? How do you interpret or respond to a KRA notice? In the case you are running your business and you receive an email from KRA saying this and this is what they are looking into, they want to come and assess or audit your business, how do you respond? What are some of the key obligations under different tax heads? How do you know that you are needed to cover VAT? How do you know you fall under the income tax bracket, matters PAYE, withholding tax, and then lastly, the consequences of non-compliance for a business. So this is what we will be covering today through our session, and we'll also have a session or a section for Q&A, but feel free, even as the session is going on, to just drop in your question on the chat box, drop in whatever comments or clarifications you would like to seek in, and then our speakers for the day will definitely support and respond to that. So I know our speakers are already online, and we will be starting in actually a few minutes. So for those who do not know CAPSA, we are the private sector umbrella body in Kenya, and we support businesses, we support SMEs as well. And this is one of the ways that we are supporting entrepreneurs, just to see how do we expand your knowledge, how do we support you in growing, how do we address such pain points and issues, and guide you in also accessing finance, accessing market opportunities, technical assistance, and so on and so forth. So thank you for joining me this morning. Feel free to as well still introduce yourself on the chat box so that you're also able to network, that we know who's in the room with us, just to drop your name, the name of your business, and where and what you do and which county you're listening in from as we proceed into the session. So before we go into the main topics, I think I'll just welcome my speakers to say hi, and then we can go into the session. So Josephat, you can say hi.
Yeah, thank you, June, and good morning, everyone. It's nice to have this conversation this morning, especially looking at the taxes and what is affecting businesses at the current times. So it will be nice to have this conversation with all of you. Thank you.
Thank you. Steve, over to you.
Good morning, everyone. My name is Steve Okoth. I'll be conducting the first two presentations of the day. Then I'll leave for my colleague Josephat. So in a few minutes, we'll be commencing the presentation as people have already joined.
Okay, thank you so much to our speakers. Feel free, as I said, do not, oh, my mic is breaking, sorry about that. Do not feel restricted to ask any questions. If there's any also technical issues and you cannot hear, just drop on the chat box and we'll be able to support. So at this point, I will allow Steve to maybe put up a presentation if you have one, and take it up from there. Thank you.
Thanks a lot, everyone. This presentation will take approximately half an hour. It's two presentations in one, and the first one is on the key issues of managing audits and other notices and queries that are coming from KRA and how to go about it. So there are a number of queries that come from KRA. They are not just audits or assessments, but different forms of inquiries that are coming from KRA. And in this presentation, I'll be going into how to handle them in the appropriate manner and in the correct way. So at the very early and lightest of point is the soft inquiries that are coming from KRA. This could be letters to explain transactions or alerts that are coming from KRA, or invitations to attend to a meeting at KRA, or to explain particular transactions or the nature of your business, invitation to present a document that is explaining your business, or any inquiry that is coming from TCCs. These are softer inquiries that emerge, and they should be handled quickly and thoroughly, so that they do not spill over into an actual compliance review or into an actual audit. The goal here is to ensure that the explanation is simple, crisp, and straightforward, and there is nothing that is a gap. Then, of course, there are much more serious much more serious forms of communication that is coming from KRA. For example, being asked that you receive a letter from KRA saying that these are the inconsistencies that we picked from data that is available within the revenue authority, and you're being requested to explain and show cause or as to what this relate to, or indicate why there should be no assessment or no demand for taxes in regard to those. Now, those ones are very serious. They start to be more serious processes that, for a significant company or a company of significant scope, you may need to engage a professional or set up an internal team that is going to handle this on a more serious note, because they can move into an audit, they can move into a compliance check, the demands may be recovered by KRA by ways like agency notices or something like that. So those ones require more serious attention. Then, of course, there comes to a situation where tax decisions have been made. You have an assessment on the table, and you have to attend to it, or you have a refund decision which has been placed. So those ones then now, most of the time, require very, very serious attention so that they can be dealt with. So there are, of course, other letters that you receive, which are basically just collection tools, the demands, agency notices, payment plans being given to you or being suggested to you, and other letters of that particular nature. So I'll be going into it, but to start, there's a conceptual framework that has to be put in place if a company is to handle tax matters, especially tax inquiries from KRA, appropriately. One, you've got to control the narrative. You have to explain your business model correctly. You have to explain transactions properly. You have to manage the communication that is going through, so that there is no wild or wide difference between the understanding of your business by KRA and by your business itself, the management team. So the narrative has to be properly managed and maintained throughout the entire process. Even if it moves into a hot dispute, you've got to manage the narrative. Then, of course, the document. How you are preparing your data room, how you are sharing your documents, are you printing, how are these documents being managed? Most of the time these days, documents are shared electronically. Are you having a data room? Are you having a portal through which you are sharing the documents, or emails are just flying and you don't know where they are going? Are you controlling the scope of documents so that you don't give what does not need to be given, but you also don't hold back what is going to support your case? So that also, control of documents is critical. And then, of course, how this material is accessed is also a very important matter. You don't want your information just flying around and going beyond scope. Sometimes part of it is even internally. Only specific people internally are supposed to access some information to manage the audit or inquiry process and to have control over this process. And of course, most importantly, where pain arises, if you miss a deadline, so you should ensure that deadlines are kept. If you miss a deadline, especially a deadline of a statutory nature, like a deadline to respond to an assessment or a deadline to appeal to the tax appeals tribunal, then now things become interesting, and most of the time you will need professionals like us to then ask for an extension, to ask for leave, to really respond to that particular matter by way of an appeal or a late objection being admitted. At that point, if you miss the deadlines, most likely you will need a very competent and experienced professionals to get you out of that. Now, if your missed deadlines are not managed properly, you can find yourself in a way where you miss your opportunity to appeal against that particular matter. And tax assessments can be huge. You've seen from time to time on the newspapers and the press, companies that have to pay hundreds of millions because of missed deadlines. So deadlines should not be missed. Now, there are certain things that cause problems in these types of audits. KRA conducts different forms of audits and the inquiries. There are in-depth audits, there are compliance checks, there's post-clearance audits, there are investigations, there are demand notices which you are to respond to. There are certain things that result into these things, and it might also not result as a result of a red flag. It could be that you are just a business of a significant nature, and it is just your time to be audited. You have to be audited within 5 years, and if KRA does not do that, then they lose the opportunity to audit. So it could just be an issue of time. It could be a target for an industry. It could be information that has come internally. Those ones are the bigger things. But there are also other small mistakes or small inconsistencies that then put you at a situation where you are inviting an audit. One, if you are missing documents, there is no support, no schedules. You are missing documents. They come for an inquiry, a brief inquiry, and you cannot provide explanation for transactions. You cannot provide support. This is a red flag that then can now move you into a much more serious investigation or inquiry. Numbers not matching. The data that is there and your books, audited accounts, the returns, things are not matching, or your VAT and income tax declarations are not matching, customs declaration is not matching with what is in the system. These things automatically put you at a red flag, because the system is the one which selects the company for a deep audit. Then, of course, untrained staff trying to do things yourself without competent teams and without professional support. This can lead to a lot of problems. Now, the failure to explain your transactions within the law is also another issue. Then late responses, late deadlines, missed deadlines, late payments, consistent late payments, consistent missed deadline. This failure to reconcile your ledgers internally, failure to reconcile your legacy issues, this kind of things, this lateness and just keeping things off until late, you don't reconcile your issues, you take a lot of time. These things are red flags. So the information requests, it's just to respond to it appropriately and in good time, and you ensure that it is properly done. The scope is properly captured. I'll leave this to where I'm really going into depth of it. You all know that there are the key thing is when you receive an assessment, you have to object within 30 days. If you miss that 30 days, then the consequence that I spoke about will then materialize, and you will now need experts to be able to get you out of that. There are also other deadlines for appealing the tax tribunal, and so I'll go into the real issue, how to handle these things. And what happens if this is not done? Now, over the years, after many years of successful handling of many disputes and also training, And this track record, we've developed a system for effectively managing disputes and effectively resolving disputes. And there is a method to this, of course, and that method needs to be adhered to. It yields success, and anytime that method is not considered also based on our research, besides just our successful experience, then the consequences can be quite red. And the process is very simple, but not easy. It is simple, but not easy. The issues that are being raised in a KRA assessment or in a KRA objection decision or in a demand or a post-clearance audit findings or assessment, all these things, or an investigation assessment, the issues have to be clearly mapped or from a factual standpoint, from a legal standpoint, so that there is clarity as to what is in contention. This sounds very easy, but it is not. It is very important to capture the issues clearly as to what really is the issue at hand. After that, then of course, the factual flow or capturing the facts relevant to this particular issue and analyzing them deeply, picking the documentation that supports it, conducting the reconciliations that have to be performed, making the case to be very coherent and very clear and well supported, deeply analyzed, supporting transactions deeply, supporting the matter very deep, using evidence, using materials, using schedules, explaining things very clearly. This one is always very important. Then, of course, mapping these facts against the law and indicating that you are solid in terms of the law and other legal instruments which could be out there in the public, statutes, case law, or precedents, common law, all this, you support your case against that, and even the practice in other countries, but also privately, if you have private rulings, if you have other rulings that are there. And then, of course, indicating what you require out of that. This approach, this philosophy applies for all those types of assessments or demands. The most importantly, in the event a matter goes to TAT and objection review or the tax appeals process, if you are going for litigation, or even when you are negotiating at ADR, that thoroughness, the thoroughness is very important. The devil is in the details, and it has to be a lot of thorough details, not just a few details. It's not a needle in a haystack that is being looked into. It is a stack of needles that has to be, everything has to be properly explained. Now, this is the way to go. I will never advise a company, if you have a dispute of significant nature, to just handle it yourself without expert support. That may be reckless, especially if it's a matter of significant value. You may end up losing a lot of money. I will also not advise that someone goes to it without a stable, strong hand of experience in tax. But still, even if you have that kind of competent support, you still have to bring yourself and manage that particular process appropriately throughout. Be open-minded in negotiations when it goes to ADR or in negotiations pre-assessment. The ideal way to handle an audit is to ensure that when the audit is leaving the ground, if appropriate and if sound, the assessment that will come is something that is agreed upon, or the outcome that will emerge is something that is already agreed upon. So this is very important to engage on a serious and professional, open-minded manner at negotiations, because ultimately it is the business, it's the management that takes the decisions when matters really have to be settled. So this is really important, the mindset, the support with documentation, the appreciation of the thoroughness that is required for handling disputes successfully. And this is our experience, the vast experience many clients supported over the years. And this is also the experience of other competent professionals, not just us, other competent professionals in the field. Or this is largely the way to close this kind of disputes and arrive at an appropriate deal. There are other things that also arise, not just disputes, but they arise after the disputes have already crystallized or are assumed to have already crystallized. For example, agency notices where your accounts are frozen by a letter coming from KRA to the banks or to your suppliers or to your customers or to any other person who is dealing with you. They receive a letter, your tenants receive letters, they receive banks and other financial institutions, investment or entities receiving letters telling them this is the amount this company owes KRA, and the money that you owe them, you must send it to us by law. So these ones have strict deadlines, and they relate to assessments or demands for taxes that you receive from KRA, and especially after failure to respond to demands. They have to be responded to immediately, and it's very urgent, because if you don't, then they just go straight to the bank accounts most of the time, and they collect that money. It is also a reputational hazard when your tenants, when your clients, when the people who have invested in you are receiving letters in the market, it's also a reputational hazard. So agency notices have to be worked on very seriously. Now, there is the issue of payment plans, which can be proposed by KRA, and if they see based on your cash flow, or payment plan that you may propose. Now, how to handle the issue of payment plans, you have to be careful that it has to be consistent with your expected cash flows. If you default, if you say I want 6 months, and it turns out you needed 2 years, now you can see this can then lead into enforcement, where they just recover it from your banks, and it can be quite an issue. So negotiation of payment plans has to be serious. Most of the time, people get up to 6 months, between 4 months and 6 months. But for serious cases, you can negotiate for a longer duration, and this is something that we wait to see. There's an app that is aiming to have an automated payment plan system. I really am doubtful as to whether it will work successfully, because I know payment plans have to be really negotiated. I don't think that it's going to be successful in automation. The automated platform will be a way of placing the application, and then it is processed. Now, as sweet as it is to resolve tax disputes, as interesting as it is to resolve tax disputes, the correct thing to do is to avoid tax disputes in the very first place, or to mitigate the impact of tax disputes in the very first place. And there are certain things that you can do to manage this situation. You get going for private rulings if transactions are quite intricate, going for private rulings so that the tax treatment of their transactions is appropriately captured. And of course, these have limitations. You can also go for advanced pricing agreements, which have now come into part of the Kenyan law. The regulations have already been drafted. The teams at KRA is already ready to start the process of negotiating advanced pricing agreements. This is relevant for international tax and transfer pricing, where you agree with KRA that this is the transfer pricing treatment of my transactions. Let's both sign on the dotted line. Now, these are things that also have to be negotiated. Customs classification and evaluation discussions, you can go for a private ruling. This one's really save a lot of time. If you want to claim significant capital deductions and you are not aware if that is likely to be brought under contention or a dispute, it's better to get it confirmed. And those confirmations are all binding legally on KRA. They're not legally binding on the company, but they're legally binding on KRA. So they are good instruments to mitigate or avoid disputes in the very first place. Now, there are other issues that also crop up from time to time, and they also lead to pain. TCCs being blocked because of data not being cleaned up in the iTax ledger, legacy issues not being closed off, payments still pending to be settled, disputes and inquiries that have not been closed off. The TCC is an issue that KRA raises. All those inquiries have to be attended to. If you miss a TCC, you might end up losing out on a tender or missing out on a bank loan or something of that nature. Your expatriate staff may not get work permits renewed. So this is something that has to be attended to also with seriousness. Most of the time, it's not attended to seriously until there is a crisis. Then there is the issue of special table. Special table, the system just captures information and it suspends you from VAT system. In essence, you cannot file VAT returns. You can't claim any input VAT. Special table has serious problems because it can escalate to a situation where an assessment can be placed on you, or the input VAT claim window of 6 months may elapse. So these are things that have to be handled with urgency, and that's just how they are handled. There are other things that you may escalate to more serious dispute resolution. If KRA completely breaches the law, you can go for judicial review as a mechanism to stop that. If the agency notices are issued unfairly, you can go for a judicial review, and so it means part of the escalation will be administrative and not just through the tax appeals tribunal and the objection process. So there are certain things that you can do as a company in regard to those ones. Just ensuring your issues really are reconciled and you keep tab as to your compliance, reconciling, Etims, all these reconciliations that have to be done. Part of this presentation, which is going to be given to the people attending this session, is going to be a document that we placed the items that a company needs to pay attention to on a monthly or on an annual basis, so that you ensure you are really not falling off. So I then go into the issue of teams or Etims. Now, this is a hot issue, and it is going to be a hot issue for the companies for the next 4 months. It is so unfortunate that this presentation is coming in at this time when it's just 2 months to the deadline of filing for many companies. But anyway, here it is with us, and our job is to just support you and give you information which is relevant as to how you are going to handle the claim of expenses and how you are going to handle the inquiries that are coming in terms of the revenue or the income or being recognized by yourself vis-a-vis what is already in the system, captured by teams and captured in iTax automatically under other sources of information. So this is quite important. The good news is there is opportunity for expenses that are not on Etims to be claimed. There is an interface. KRA have already given notices how they are to be attended to, so you can claim expenses, or some of which are valid but are not necessarily coming through Teams. So that is a good news, and we are going to take you through that interface. The other thing is, do not take a auto-populated return or expenses to be automatically deductible. Deduction is still based on the law and is still based on the availability of those deductions under the law. So not every expense on which is captured on Etims is deductible, and not every expense which is not captured on Etims is disallowed, or it has to be based on the law. It is a provisional tool, but it's not just a provisional tool. It's also resulting into other risks that I'm going to go into. So just to start, the way we've lived our life, or in terms of declaring returns for tax and then handling tax matters, is self-assessment return system. We are in a self-assessment regime. You assess yourself, you file the returns, you prepare your books, everything, and then KRA can come later and conduct an audit. Now, this is not anymore. Now there is validation of income and expenses being conducted in real time or near real time basis by KRA. Withholding tax returns filed by your customers is giving KRA information as to what amount of income is to be expenses. Customs data is being pulled in. So there is more of a real-time caption of information by KRA, and it's awaiting the final filing of the returns. And these are going to be reconciled together to determine what is your income and expenses position. And you can see this is giving KRA a bigger window to review the details of a particular business to determine the correct tax, or to actually raise additional taxes. And that is what KRA is going to be doing. It's going to be using these tools to assess risk to revenue and to support the raising of additional assessments to meet their targets. This is just what's going to happen in in reality. So it is an invoice engine, it's a validation engine, it's a risk issue, it's a collection amplifier. This is what Etims really is. It is many things, and companies really need to have a proper strategy how to manage it. As I am continuing with the presentation, any question or that you raise, you can put it in the chat, and my colleague John Como, who is also here with me and is one of the panelists, but at the background, he will be responding to those questions. My other colleague Joylene and team will be responding as well for real time. So you are free to put any question as I am continuing the presentation. So this is really the purchases, the pins for the buyers, debit notes, credit notes, non-VAT invoice. These things are an issue. Withholding tax issue, ICMS and customs data being captured, the return, the manual non-Etims items, the schedule that you have to provide. This is the validation architecture for KRA, and they are using analytics and AI. This is really just what it is. So any inconsistency of significant value is going to be automatically flagged, just for you to be aware how you are managing risks arising from Etims has to be quite carefully crafted, and it has to be a well thought out issue. It is not as easy as it looks. It is a risk mechanism. Yeah, now KRA published a number of notices so far relating to this or relevant to this. They are going to attach Etims with specific items. TCC is going to be connected to this. Pins are going to be vetted. They're going to use it for taxpayer mobilization to recruit more people into the tax bracket. They can put aggressive mechanism for a real-time reporting, like in the fuel sector. So this is just what it is. Now, earlier on, I had mentioned that Etims does not override the law. Etims is a tool that is to implement the law and accounting practice, and so that is very important. Not everything that has gone through Etims is going to be deductible. Deductibility is based on the law, fact, everything, and not everything which is out is thrown out. It can come in with the manual population. That's really just it. And it is important to get to know this, that it is not an end all or be all. So income, expenses, imports, adjustments, those are the items that are critical. There are the non-Etims items that will go into the manual population, employment costs, imports coming in, imported services, financial institutions fees, interest, airline ticketing, other accounting adjustments, accrual, deferral of income, prepayments, cost of goods from the inventory. These things are going to go into the manual of position. There's a whole beautiful list that is coming for the people who are going to receive this presentation. We'll see it on a schedule, how these ones are coming in. So this is really it. You can take advantage of this, and you can see the system will be capturing information, and KRA will already have a good portion of the information that is relevant for you. They can easily just conduct a review, and their system can highlight the areas of risk automatically. So the risk of dispute is for sure increasing as a result of Etims. That's for sure. Yeah, these are just how to implement it, the CVS discipline, how to implement this this particular issue. Now, there are, of course, certain challenges that are coming in that we do not have solutions for yet, and others, we have some solutions for them. KRA also does not have solutions for some of these things. There's policy gaps of significant nature resulting from these challenges. One of them is the invoices that are coming in, just a massive amount of invoices that you have to deal with. That already is a challenge. So, for example, in the education sector, you have 5,000 students, 2,000 students. You have to put this through, and it has to be on the term, and the term begins at a specific date. This is a serious problem for them, serious problem for manufacturers, traders. You can imagine all this information has to be processed. It's a big administrative problem for most businesses. Those who are dealing with casual vendors, informal service providers, artisans, you're buying from the Juakali people. These kind of vendors are not easily consistent with Etims, and they have resisted Etims. So this is a problem that we have. There is no immediate solution for this. This is an issue that is arising because KRA is implementing Etims in a blanket, blind manner, and that's just what it is. It's not implemented tax years to on board. This is just coming all at once. It is a problem for everyone. There's no immediate solution for this kind of challenges. The agricultural sector, those who are buying livestock to slaughter, big problem, no clear solution. This buyer-led, buyer-initiated purchases or reverse invoicing is not working effectively. Some people are able to handle it, most are not able to. It's resulting into risks of genuine expenses not being allowed, or even revenue being treated as profit, because if you cannot have invoices to support your activities, let's say farmers in the agricultural sector, you cannot support a big chunk of your expenses relevant to production. So this is something for the lobbying by the private sector to have sanity, to ensure that Etims is a provisional position, not a final position. There should be an acceptance that certain items cannot just be on Etims, yet they're genuine, they can be vetted, and they can be provided separately. This is just what it is. Now, in terms of the avalanche of invoices, we as BDO, or there's a tool that we've developed, we provided, which can generate 50,000, 100,000 Etims of invoices within an hour. So these are technical tools. So for those who need that kind of a tool service, then you can be able to access it to manage the issue of having to generate so many invoices. You can access a tool that does it for you, and it's more accurate than humans. So that is a solution that is there. But for all these other problems, really, there's no clear solution. I've talked about the agricultural sector and the problem that is faced over there. It's one of the sectors that is challenge. It's just being here because otherwise their business, the Etims is not consistent with their business system. The same with the you know flower sector. These are items that for the agricultural sector, what they can really do to try to do to mitigate the situation. I've said there's no clear winner here, but there are things that can be done to mitigate the situation, to manage the schedules, buyer statements, records from cooperative society, expense support packs. It's all here for you to access, and it is also summarized in a schedule what you can do to manage the situation based on the work that we are doing with some of our clients in these sectors. For the floriculture and exporters, manufacturers, reconcile the Etims and customs data. ICMS is a very important one, how to handle COGS, stock movements, all this to ensure that these are the mitigating aspects that different sectors can do to be able to manage the Etims issue and the declaration that we have to do. So these are the challenges of automation that is there, and just what we have to do to mitigate the risk of blind automation. We are in this particular era of blind automation, and these are the consequences. We anticipate that the industry is going to do a serious pushback so that we have sanity. It becomes a provisional issue. Other items that have to be, or the other risks that are there, the pins being wrong, supplier non-compliance, and supplier non-compliance can result into being blamed for the supplier being a missing trader, for example, or items being disallowed. Credit notes is an issue. Rate changes, when the rate changed, like now for fuel, changed, the Etims is not consistent with the tax rate. And of course, this is not the only tax rate change which we are going to have. We anticipate that in the future, the changes are going to happen. And now you have to go into Etims tools to put the new rate. There are challenges that are there or that have to be managed. Anyway, the point is there is professional support in the market. We are here, RSM, other firms are in the market to be able to support you in managing all this, ensuring things are done correctly and risks are mapped and addressed in good time. This has to be checked also on a monthly basis just to ensure it is done well besides the annual one. So the point is, Etims is a lot of transactions, and KRA now has bigger visibility. It is not to be feared, it's to be managed. If you don't govern the data is going to govern you as a business. Just ensure that you govern your data and you reconcile items appropriately. Of course, for sure, for the cost of compliance may a little bit escalate, but that's just for the initial period of time. There is enough professional support in the market for business, and I don't anticipate that this is going to be a crisis. Otherwise, thank you very much for your time, and we are available for any questions in the chat. And I'll now be handing back to the host.
Thank you so much, Steve. I can see the discussion is definitely very timely. The questions are coming in, and I know we'll address them at the Q&A. But for the participants we have on call, feel free to still drop them, and then our speakers will be addressing them shortly. We have gone through Etims, we have gone through how to address certain challenges. So allow me at this time to also now welcome Josephat to just tackle some of the aspects. We have two aspects on his side. What are the key obligations under different tax heads? What are the obligations under VAT, under income tax, under PAYE, under withholding tax? And I can see there's somebody who's picked up something Steve mentioned, that withholding tax is not final. So he's Josephat may also be able to shed light on that. And what are some of the consequences of non-compliance for a business? So Josephat, I think maybe Steve, you could stop sharing, and then Josephat can maybe put up his presentation, and then we will be taking questions after that. So feel free to drop the question on the chat box. Just then we are able to take record, and different teams will be addressing them as we progress.
Josephat is already presenting, so
yes,
Josephat, please speak up.
Okay, thank you, Steve, for that, and June. I hope you can all see my screen. Maybe June, you can confirm.
Yes, I can. Maybe you can put it in presentation mode.
Yeah. Okay. Ladies and gentlemen, I think well covered, Steve, in a nutshell, laying the basis of what we are seeing as current trends in the tax framework in Kenya. And maybe the objective of this other session will be, as June has stated, to look at what are the key obligations that businesses have, look at or identify any plans, risks around each and every obligations that your businesses will have. Also look at the consequences of non-compliance and how to be ready for KRA audits. And Steve has also covered that in breadth. Maybe just to lay the background, we are seeing the Revenue Authority now leveraging so much on technology and such advancements. So we are seeing the increasing digitization of processes, ideally to make sure that then there is efficiency in tax collection. And that's why we are seeing the introduction of Etims coming in, just to make sure that then it's a compliance tool to make sure that all taxpayers then are tax compliant. And looking at also the easiness of the interaction with the Revenue Authority through the digital platforms that they have, iTax and for domestic taxes, and ICMS, the ICMS for customs. We're also seeing technology also coming in the real-time audits, such that you're seeing with the current out of population, out of Etims, we are seeing KRA able to pick transactions in a real-time basis, as and when some of those transactions happen. And also the use of TCC also as a compliance tool, where you are unable to submit some of these proposals that you might have and tenders that you might have maybe with the government without having a valid TCC. These are just tools the Revenue Authority is using, ideally to ensure that then there is compliance, which then means as and when things change, then we do need to also acclimatize with that environment and also change. Somebody said that a bend on a road is not the end of the road. Of course, not unless you fail to make the turn. So as and when things are changing, then we need to change, be and keep abreast with the changes, and also abide to those changes in maybe way of doing things and the changes around the existing tax laws to make sure that we remain compliant. On to the topics, looking at the key different obligations or taxes that you might be having. I'll start first with VAT. I know Steve has covered mostly on the KRA notices, and audit notices are some of what we are seeing becoming very rampant in the recent days. And VAT is one of the obligations that you're seeing the Revenue Authority really looking at. And one of the things to note is that there are three rates of VAT. We have the standard rate, zero rated, and exempt. And I know most of you wonder what is the difference between zero rate and exempt. I think the key difference is that zero rate is still a VAT rate. Exempt means there's no VAT, but zero rate means there's VAT at 0%. The key difference on an operational perspective is that for zero rated and 16%, which is the standard rate, then you're allowed to claim input VAT that you incur in your normal business expenses. Well, when you're dealing with the exempt supplies, then you're not allowed to claim any input VAT. On a deadline or timelines perspective, the filing is still to be done by 20th of the following month. And the threshold for VAT registration is still 5 million, still not yet changed for quite some time. So the key areas of risk around VAT is first, with the introduction of Etims then and the auto-populated returns, we need to make sure that then as and when you're receiving your invoices relating to your purchases, then you need to make sure that those are Etims compliant. Otherwise, then you'll be unable to claim those. But also putting emphasis on something that Steve said, that yes, Etims will be a control, but the deductibility of any of this is based on the existing law. So when you're looking at claiming any input VAT, then you're looking at making sure that you're not claiming anything that is restricted under Section 17. Also missing invoices, you have to have documentation to support each and every of your claim. So in case of a dispute, you need to demonstrate, or the burden of proof is always on you as a taxpayer to demonstrate that you actually incurred that expense and that it's a business expense that is not restricted for a claim. Maybe other risks will be around penalties, which is 5%. That is when you're non-compliant. Any taxes not paid, then you'll incur late filing or late payment penalties of 5%. And this keeps growing by 1% as an interest on a monthly basis. So those are the key things to look out for as risks around VAT. So Etims invoicing, making sure that you're filing your VATs on time. Making sure that you're then paying your VAT if you're in a payable position, and maybe on a monthly tracking to see if your return has auto-populated correctly. I think the other obligations that most taxpayers miss out on is one, the reverse VAT, and most of you would be wondering what reverse VAT is. Basically, before 2023, these only apply to registered persons who are registered for VAT and not for those who are not registered for VAT. Basically, when you import a taxable service, that is when you get a service where the supplier is a non-resident, then the VAT law prescribes that then you are deemed to have made a taxable supply to yourself. So and what that means is that you need to charge yourself VAT at 16% and remit that to KRA. This scope was expanded to cover all persons. So whether registered or not registered, then you need to account for reverse VAT if you import a service, a taxable service. One of the things then to note is that you are not then required to account if you are entitled to a full claim of that input VAT, because it will be an in and out where you are charging yourself VAT as 16%, and you are also entitled to a full claim of that VAT. The other thing then to also note is that is on withholding VAT, where then you are an appointed withholding VAT agent. So keen to see all these notifications from KRA where you become an appointed withholding VAT agent. Mostly this is on those who have a lot of supplies or a lot of purchases, where then KRA uses withholding VAT as a mechanism of collecting taxes at the source. Basically, it is a compliance mechanism because on a real-time basis, the Revenue Authority is able to tell that somebody has actually made a supply to you. So you're required to withhold VAT at 2% and remit the same to KRA. Looking at income tax, and this is corporate tax, the rate is still at 30% for companies, and we know we did have a different rate for branches, 37.5%, but now that was harmonized to 30%, and also including a repatriation rate of 15% in case of repatriated profits. That is for foreign branches. But for Kenyan companies, resident companies, it's still at 30%. And also the same requirement to file your annual returns within 6 months after your year end. We know corporates will have not all corporates will have December as their main year end. So you need to track then when 6 months lapse from your year end. Some of you will find yourself having irregular year end like June, July, or any other month as opposed to December. So you need to keep abreast of that. Also looking at your installment taxes, which go in the 4th, 6th, 9th, and the 12th month after your year end, making sure that then you're paying your installment taxes. Most of these are computed based on maybe 2 approaches. You could be looking at prior year, where you assume a growth of 10% to your prior year tax that was payable. Then you pay that in 4 equal installments, or then you can use the current year, where you have to assess basically you have to assess your business profits on a quarterly basis to basically determine how much should be the installment tax that you pay at any single installment when any single installment is due. Also importantly to note, where you've paid your installment taxes for any year of income and you still have some amount of tax still payable, that is the balance of tax, then that should be remitted at the end of the 4th month. So looking at, we are now in April, we are looking to see balance of tax of all December year ends also being due by end of this month. Again, on information retention, that is record retention. We are looking at the commissioner being allowed to review as back as 5 years from your last file return. So ideally, you still have to maintain your documentation, at least make it available and sequential, making sure that it is a tight support for all your claims and the taxes paid for at least the last 5 years from your last file return. So it is proper to do that, because in case of an audit and which then evolves into a dispute, the owners will be on you as a taxpayer to make sure that you're proving or you have enough documentation to prove your case. So important to note some of those things. So the risk we are looking about around income tax is record keeping, making sure that then you're keeping your records correctly. Again, looking at what mostly we see coming out of audits on a corporate tax perspective is where you find businesses having claimed each and every expense without considerations of what is allowable and what is not allowable as per the Income Tax Act. Mostly you'll find personal expenses being claimed, which are non-business costs. Remember, you're only allowed to claim expenses that are wholly and exclusively incurred in generation of the revenue. So you cannot be offsetting personal expenses within your business just to lower your tax base or to lower your tax on itself. So those are some of the things to make sure that you're then scrutinizing to make sure that each and every expense that you're claiming for tax purposes is actually an expense that was wholly and exclusively incurred in generation of that income. Okay, on pay as you earn, these are businesses where you will have employees and you do pay them a salary and wages. So importantly to look at that, because then remember the obligation is on the person who is making the payment here, who is the employer. Or else you might say that the tax burden is on the employee because it's the employee who suffers the tax, but the obligation is still on the employer. But however, if you then have a shortfall in deduction of PAYE, the assessments will always be on the employer, which then means an additional cost to you. So it is very important then to be keen to make sure that then you are emitting the correct PAYE or you're making the correct PAYE deductions on your employees and remitting the same to carry. So the monthly deduction becomes very crucial, and also submission of the same by 9th of the following month and filing those PAYE returns. Mostly the issues we find in audits that relate to PAYE also around personal expenses. You're looking at making sure that you are deducting the correct amount. And before you make sure that you're deducting the correct amount, then one of the things that you have to get correctly is what is the taxable amount. Some of the businesses will give some benefits to employees that they often forget to include those benefits as part of the taxable amount on the employee. So you're looking at any car benefits where maybe an employee is using a motor vehicle that belongs to the company, any housing benefits where you as an employee or as the employer has provided housing to your employee, and such other benefits. Some might be cash and some might be non-cash. So making sure that then you're getting it correctly in terms of what is the taxable payment, that will ensure that you're making the correct deduction on a PAYE perspective. Other issues that we find is mostly on the classification of employees, where you're finding some businesses classifying employees as consultants, just to make sure that they are deducting withholding tax and not PAYE, because withholding tax is cheaper at 5% as opposed to PAYE. The risk around this is that in case then you misclassify an employee as a consultant and there is an assessment, whatever is over and above, so the difference between 30%, whatever would be maybe the PAYE that was chargeable to that employee, and the 5% remitted as withholding tax, that will be an outright exposure to the business. So important to make sure that then you're keeping it tight to make sure that you're deducting the correct tax. They will always carry out what we call the MICE test. They'll be looking at mutuality and control and some of those benefits that you might be giving somebody you've classified as a consultant, which basically are not common benefits that could be given to any consultant. So you're looking at having a contract with this person that talks of leave days. They have clear reporting lines within your business. There are instructions to report maybe to work 5 days a week from 8 to 5. Some of those will lean that employee more to being an employee than to being a consultant. So importantly to make sure that then you're classifying some of those personnel correctly so that you're deducting the correct taxes. Other issues that we see is maybe where there are bonuses being paid and maybe you are the shareholder, and bonuses to some of those directors who are shareholders paid maybe on the basis of their shareholding. Yes, it might be seen as a bonus, outright as a bonus, but because it was paid on the basis of the shareholding, we are saying it also being interpreted to be a dividend, because the Income Tax Act defines a dividend as any payment made to a shareholder with respect of their shareholding. So if some of those bonuses are paid to those directors or owners of the companies who are also directors on the basis of that shareholding, you might see KRA coming also for an extra charge of withholding tax. Despite having remitted PAYE, they might come also for withholding tax. So proper to ensure that any bonuses, any performance bonuses are not given to some of those directors who are shareholders on the basis of shareholding, but basically based on KPIs of what they achieved as a performance. So some of those are the items that we are seeing around PAYE. So making sure that then you're doing things correctly to avoid exposures. Okay, withholding tax, same. This is a mechanism of collection at the source. And basically the revenue authority out of your withholding tax, they're able to tell that somebody have actually made a supply to you. The rates will differ depending on the item you are withholding, and mostly what we've listed here are some of the items that will attract withholding taxes. So some of the key risk areas to ensure is that, one, you're using the correct rate for each and every payment that you're making. Make sure that then you are applying the correct rate of withholding tax. Then number two, making sure that then you've remitted within the stipulated timelines. This changed from 20th of the following month to within 5 working days after you make the deduction. So proper to make sure that you are monitoring your payment cycles to make sure that then any payments that are subject to withholding tax that you make in any cycle, then you're able to remit that within 5 working days after making that deduction, to ensure that then you do not incur extra exposures in tax on withholding tax. An interesting introduction that was introduced last year was then that where you have not withheld and you are able to prove that the other person actually declared the sale for tax purposes, then the liability is extinguished on you. However, this is an increased burden because it would be not very easy for you to prove that another taxpayer actually declared the sale. So proper to make sure that then you actually cover yourself by making sure that whatever you're paying and is subject to withholding tax, you withhold. And whenever you're not sure about anything, you'd rather withhold because it is not all lost, because that taxpayer, that supplier is able to claim the certificate at the end of that year of income where you have withheld on them. So proper to just make sure that then you're keen on some of those payments that you're making that are subject to withholding taxes. There is turnover tax, which is basically was introduced to simplify taxation, especially for small and medium enterprises. And mostly this is where you do not have to keep all the records as you may look at it, because the tax itself is applied on the turnover, which is the revenues that you make. And basically the threshold for those who fall within the ambit of turnover tax are taxpayers whose revenue threshold is between 1 million and 25 million annual turnover. Being that this was introduced to simplify taxation for those in the small businesses, one of the things that we have kept making as a submission to Treasury and Parliament is to see if we can harmonize the threshold for turnover tax and that of VAT, because if the threshold of VAT is still 5 million, it means that then there are people who will fall within both regimes required to register for VAT by virtue of supplying 5 million taxable service supplies within any year, and also fall within the TOT regime. TOT basically was to ensure that then you're not you do not focus on your expense side of it because you're paying taxes on your revenue. But then it is counterproductive where you still have to maintain the same for VAT purposes where you fall within the two regimes. So those are some of the things that we look at in terms of our policy submissions and what we would want to see harmonized on a tax perspective. Key risk could be looking at under declaration of your sales. Mostly this is what we are seeing being tightened, where every other person needs to, whether VAT or not VAT register, needs to be on the Etims regime, apart from those specific supplies such as air ticketing and some of those which are precisely exempt from the Etims regime. So that is what you're looking at, and making sure that then if you're under this regime, then you're making sure that you're monitoring your turnover, so that then as and when your turnover exceeds the threshold for TOT, then you're able to revert to the usual corporate income tax, where you have to pay 30% of your net, which is whatever is your taxable income or taxable profit. Other obligations that businesses will face go to the tune of excise duty. This is where you're importing or manufacturing accessible products. Initially, this was seen as a sin tax, mostly on what you'd call items that are not really basic items. But we've seen that over time evolve to not only items that you would call luxurious, but looking at or harmful products, but looking at it also extending into financial services, where you're seeing other fees that maybe are charged by financial institutions also being subject to excise duty. So you're looking at when you're manufacturing some of these items that are subject to excise duty, then you do have an obligation to make sure that then you have that obligation active on your iTax, and you are charging the correct excise duty on the products that maybe you manufacture. Looking at extending also these to even bottled water, that ideally you'll see people who purify water and have to then package it in bottles, then also need to be cognizant of that obligation of excise duty. The other taxes will be on a customs perspective. We're looking at businesses that mostly deal with imports and exports. And mostly the risk that we see around customs is in three areas. Basically, one would be valuation. There's tariff classification, because that directly affects what is the rate that you're paying, rates of duties that you're paying at the point of importation or exportation. Then complete documentation. We did see, especially on exporters who might be expecting to be in a VAT refund position by virtue of making the exports, which are zero rated. We did see the certificate of export being prescribed as a document that is very necessary to prove that an export happened. Mostly what you saw is that most taxpayers leave some of these to the clearing agents and do not really follow up to make sure that the proper thing has been done. Remember, at the end of the day, if you're importing, you're still the consignee of that product. And in case of an audit, then you as the importer, if there was any under declaration of duties, then that will be your own liability. So it is proper to make sure that then you're also keeping abreast on what your clearing agents are doing to make sure that they do not leave you exposed in the future in case of audits by KRA. So proper valuation. We do have 6 methods of valuation, with the most commonly used being the transaction value, which basically looks at what is the commercial invoice that you have, and your C17 declaration forms, and those your insurance invoices and freight invoices, to just basically do the valuation and charge any duties that are due on that. Also looking at classification, mostly you're looking at what the product you're importing is, and where it lies within what is commonly used in the East African, which is the East African Common External Tariff, which basically gives the tariff classification of most of these items. So it is proper, as you can use your clearing agent or your tax consultant where you're not sure about the correct valuation and classification. But also, as Steve mentioned, there is that opportunity to go for advanced rulings where you have your advanced tariff classification rulings where you're not sure, you can write to the commissioner to just make sure that then you get a ruling on what is the correct classification of the goods you're importing. So a very important tool to ensure that you remain compliant on that perspective. On to what are the consequences of non-compliance. We're looking at the financial consequences, which basically we look at the filing penalties of 5% and non-payment penalties of 5%, and increasing 1% monthly interest that is charged on any taxes that are still outstanding. So it is very much important to ensure that you remain compliant. And sometimes what we advise clients to do or taxpayers to do is to take that proactive approach where you do not wait for the Revenue Authority to come and audit you for a period of say 5 years, and you find that you actually have penalties and interest which has been growing and accumulating over the years due to non-compliance. You can take that proactive approach where you have a tax expert come review your records on a periodic basis to ensure that then you're compliant on all obligations to reduce some of these financial risks. Looking at it going to the breadth of even 200%, where you are found to have evaded taxes. This is where there is willful neglect, where you did not pay any taxes out of knowing, not out of not knowing. But again, being that would need to have a proof of fraud, then the onus is always on the Revenue Authority to prove that then you actually, it was actually a case of willful neglect, that then you're charged a penalty up to 200% of the taxes not paid. There's also operational and legal reputation that you need to look at for your businesses. Remember, we are looking at during audits, some of these are very disruptive in terms of your day-to-day running of the business. So you'll find that there might be a lot of disruptions when there is audits, and especially where you do not have documentation put into the correct order, and you have to have KRA in your premise for a very long time. Trying to look at the information that you have that maybe is not placed in a very good order, then that might be disruptive. So it is very, very much important to look at that. Other implications is where there are agency notices. I know Steve also talked in breadth about agency notices, where the Revenue Authority can write to your banks to basically instruct them to pay or to deduct monies from your bank account or even freeze them due to unpaid taxes. So you're looking at that. There is also the reputational damage of your business, where you come out in bad light out of non-payment of taxes. So that is also something to also look at. Having looked also at the financial impact of it, you're also looking at cash flow strain, where you had not planned for any of some of those penalties and interest, but then when there is an audit and assessments are issued, agency notice demands issued, then you have maybe to suffer on a cash flow perspective, and looking at other things like seizure of assets and prosecution, and also looking at loss of contracts, where maybe you do not get a tax compliance certificate out of non-compliance and you're unable to do business. So these are some of the impacts that you'll see on your business for non-compliance. So what are the key takeaways? We always say that the cost of compliance is cheaper than the cost of non-compliance, looking at the breadth of penalties and interest, and also other reputational risks that you get exposed to due to non-compliance. And also one of the things which is very critical is documentation. Remember, as and when the Revenue Authority comes, you have the onus is on the taxpayer, in this case, you as a business, to ensure that you do have proper documentation to support what were your tax declarations. As Kenya, we run a self-assessment regime where you first do a self-assessment and then you are open for an audit in the future to just verify that your self-assessment was correct. So having proper documentation to actually support your self-assessment is very critical in this case. Also knowing what are the tax obligations that you have based on the operations of your business. So various businesses and various business types will have different obligations based on what there is. So it's proper that you're looking at what are your revenue streams, what are the taxes applicable on those revenue streams. Is VAT applicable? Is withholding tax applicable on any payments you're making? Do you fall under the TOT regime? Are there any incentives that you could enjoy based on the businesses that you're doing? And this is now where the tax experts come in to just make sure that they're reviewing this and advising you on where there could be tax savings out of the incentives and businesses that you do. Also engaging KRA early where you're not sure through maybe application for private rulings and advanced rulings, advanced pricing rulings for maybe transfer pricing purposes. Those are also some of the things to be keen on. Yeah, and I think as a part shot, maybe what I would say is that the best time to address a tax risk is before it then becomes a KRA notice. And the second best time is now. So it is proper that you start, if you've not started, you start looking back to your business, making sure that your processes and your declarations are correct, so that then you're able to avoid some of these nuisances which come around with the outcomes of audits in case of non-compliance. I think that brings me to the end of this presentation. I'll now take it back to the host.
Thank you so much, Josephat and Steve. I can see our time has really gone, but the questions and the engagement on the chat box shows that this was really, really pertinent. I'm here wondering whether we should organize a part 2 of this. Steve, if you agree, you can smile so that I know whether we could re-engage this.
Yes,
because I can see the feedback, and I thank you so much for also just responding as Josephat was just taking through his presentation. I can see you have quietly addressed a lot of the questions, and really thank you for unpacking these issues. I'm not sure if there are any questions that have still been left, but I know just in the spirit of also just being able to wrap this up, but also support the entrepreneurs, if I'll take maybe 2-3 quick questions that have not been addressed on the chat box, feel free to just raise your hand and then you could unmute and ask. And then we are able to address that. But also maybe feedback also on the session, what you think we have not touched on that you think we can touch on, please drop it on the chat box. BDO East Africa and RSM are also in the tax consultancy space. So I don't know whether Josephat and Steve have someone from their team who they want to share a contact with that any entrepreneur on the call would want to reach out to for any support or services in that regard.
Thanks a lot. My contacts and the contacts of my team will be on the presentation itself, and we are available to support.
Yeah. Okay, thank you as well. Josephat, I hope you also share the same from your team.
Yeah, it will be a similar. Yeah, we'll put our contacts on the presentation.
Okay. So I'm not seeing any hands up, so I'm presuming that the questions.
I have a question.
Okay, yes, proceed.
This is Isaac Karanja of Pamoja Enterprises. I wanted to know how can we get the notes of what they have taught us today?
Since all of you registered, they will add via email as well as the recording to the session. They will be after this session.
Okay, thanks.
You're welcome. I can see 2 questions on the chat box. Rent is a major expense. How do you deal with landlords who don't issue ETR receipts? I don't know, Steve or Josephat, who would like to tackle that. And then we have what are some of the tax compliance notes? The CK water in its space.
Okay, so this is a major problem for many people. I listed it as one of the supplier problems of people resisting to onboard onto Etims. And so you have people who are just saying, I'm not gonna do Etims. One of the solutions is the reverse invoicing, but even the reverse invoicing, you have to get their PIN and their details. Or I know of people in the agricultural sector who have had to create PINs for farmers, but there is only to an extent that you can do. If it is commercial premises and the landlord is refusing this, then that's a major area of refusal to comply. So it is one of the challenges. The easier solution is to do reverse invoicing, but even reverse invoicing has to be mutually agreed upon.
I can see, I think something that has struck a lot of people is the fact that withholding tax is not final. I think people have become very shocked that that is not final based on the session today. But yeah. Tax compliance nodes, should a CKD importer in the EV space we assemble locally? I'm not sure I understand the question, but maybe the tax experts can advise.
Oh, I didn't hear it. Is it on the?
Yes, in the chat.
Yeah, there is quite a lot that you have to look at if you are a CKD importer, and probably if you are doing local assembly. This one requires careful look. We act for some of the players in the industry. There's quite a lot to be looked into, or for this and the eligibility criteria. This requires specific consultation. You can reach out, and then we'll support you.
Thank you so much, Steve. Thank you so much, Josephat, and your teams as well, who I can see are on the call. And thank you to everyone for joining us today. As I mentioned, I'll be sharing the slides and the recording of the session after this or in the course of the day. So be on the lookout in your emails to receive that. Feel free to respond to that email with any questions or any areas of focus that you feel we have not touched on, and we can definitely discuss with our partners and be able to bring that to you. The slides will have information on their contact details, so feel free to reach out to them and engage on how you would like to be supported best to address some of the issues that you are currently facing. I have been your lovely host, June Mwangi from KEPSA. Maybe I'll give my two speakers a minute to just say any parting shots, and then we can call it a day.
Thanks a lot, everyone, and thanks for KEPSA for this occasion. We look forward to further supporting the private sector in the industry and entrepreneurs and managers running businesses. It's quite a period for them, but there is help which is available, and it's competent among the professionals in the industry. KEPSA plays a very big role in supporting our businesses in this country, organizing forums like this, or constantly working hard to improve the business climate, to improve the tax laws and other regulations that affect businesses. And I love to, it is my pleasure to congratulate KEPSA for that constant work. I'm a member of some of the committees of KEPSA, and it is really a celebration how the Secretariat works very hard and around the clock, late in the night, or throughout the year, just to support businesses in this country. Thank you.
Thank you very much, Steve. Josephat.
Okay, thank you, June, and thank you to all participants. First to KEPSA also for organizing this. One of the things is that tax is a very broad subject that maybe we cannot confine it into the 2 hours that we have. It is always an ongoing conversation. Very dynamic in terms of changes coming on a yearly basis through the bills that we see and the acts that we see coming up on an annual perspective. So it is a conversation that can always be had. And because we cannot exhaust everything within the 2 hours, as Steve has said, feel free to engage us as and when you have any queries, any compliance issues that you have. And yeah, we are here to act as your compliance partners, so feel free. So thank you so much for having us this morning.
Thank you as well. So thank you all for joining in. It has been a lovely, should I say yes, 1 hour and 36 minutes together, getting to unpack tax and Etims and KRA notices. We hope to continue engaging more throughout the year and throughout the quarter, so to better supporting businesses and growing together. Asanteni sana.